Thank you. Thanks for being here. The few, the proud, those that are ready to have a really smart conversation. I'm Caleb Silver, the editor-in-chief of Investopedia. Delighted to be here with my good friends, Kristen Myers and Callie Cox. We're going to be talking about the future of finance, but really, what it really means to younger generations, how they perceive it. And just think about this for just a second. Millennials and Gen Z have been through the great financial crisis. They've been through COVID, the COVID pandemic. They've grown up as a cashless generation. They don't really know what it's like, many, to break a 20 and get 12 back. They grew up in the crypto age. They live through their phone. They're heavily influenced, pretty skeptical, willing and wanting to do it their way, and that makes the future of finance super complicated. It's evolving, but it's also a challenge to us and to everyone out here. So I'm really excited to have this conversation. Callie, tell us what your position is for those that don't know what you do. What are you doing these days?
Yeah, so I'm Callie Cox. I am first and foremost a millennial. I'm 33 years old. I'm the chief market strategist at Ritholtz. And I tell you that because I want you to know that I have these conversations in every aspect of my life. And I think about it a lot. But I'm the chief market strategist at Ritholtz. I think about how to usher in the next generation at Ritholtz. That's one part of my main role. I also talk to advisors about what's happening in markets in our portfolio. That's the strategist side of things. But we have two service tiers that service younger investors who are building wealth, the Henrys. And I'm also a member of the Compound, a YouTube-based, newsletter-based content platform.
Kristen, what are you up to these days? You're at ETF.com, but let's talk about your role in the industry and how you've seen it evolve.
Yeah, so I'm the editor-in-chief of ETF.com, so as its name suggests, I'm about all things exchange-traded funds. And what's really great about being at ETF.com is, as a lot of people know, ETFs are really I don't want to call it the gateway drug to investing, but it's a really great tool that a lot of newer investors, retail investors, younger investors are utilizing essentially to kind of get involved in the markets, in addition to, of course, those older investors that we see. And so I answer a lot of questions from younger people, which is what the hell is happening in the economy? What does that mean for me? How do I take advantage of what I am seeing out there in the news? And essentially, how do I kind of navigate some of these times? As you're mentioning, for millennials particularly, we've had it pretty rough. I'm also a millennial. We've had it pretty rough when it comes to finances and the economy. And so I think a lot of them are trying to navigate a world where things were always going up, and now they're not always going up.
Right, and that leads us to a massive word, which is really what this whole industry is based on, and that's trust. Right? We are all trying to establish it as content creators, as people who create educational information. You guys do a great job. If you're not following them already, please make sure that you do. And at the end of the day, it's about trust. And when you go through those types of crises and you kind of watch what's happening these days and what used to make a lot of sense, or what we grew up, is certainly what I grew up as a Gen Xer, doing the right thing, investing for retirement, putting your money away every 2 weeks. It's going to work out. That crack can become pretty big. So how do you see that manifesting, Kristen, especially in the mismatch between what younger people think that they're going to be able to do in terms of retirement, in terms of earning money, and what they're actually doing?
Yeah, so there's really big, I think, misconceptions about how much money you actually even need to retire. I think 1 million is the number I always keep seeing, like you only need $1 million out there. But for millennials, they know that Social Security is not going to save them. The pension is not something that they can rely upon. And so they do know that they're going to need money invested, right? And we've all heard that around the age of, 35, you're supposed to have double your salary in retirement savings or in retirement accounts. I don't know anyone that actually has hit that number. So there's a problem with that, but then they see things like Bitcoin and cryptocurrency and they think, oh yes, I'll be able to retire from buying a lot of Bitcoin. And we have heard about those Bitcoin millionaires and trillionaires that exist out there. And so I think millennials right now are looking for an asset that's going to save them in an environment where it's difficult to buy a house, it's difficult to save, it's difficult to even just pay rent, let alone set money aside for retirement.
And when you think about what we went through in terms of the great financial crisis and that giving birth to Bitcoin, and then all of a sudden that becoming a prospect for young people. Callie, you and I were talking about this. You deal with people all the time that either made a little fortune in it or expect to make a little fortune in it, and that may be the basis of how they're going to create more wealth going forward. How do you interpret that as you see those questions coming into Ritholtz and the people you deal with?
Yeah, so like I said, I sit at the nexus of a lot of Ritholtz's service tiers, and we have a robo-advisor that serves anybody with any amount of money in their pocket with light financial planning, all the way up to family office clients. We're talking billionaires with a B. So, yeah, the fun part of my job is I get to see what they're asking, what they're concerned about, and I get to kind of compare notes. And let me tell you, even in the traditional planning side, where we have a $1 million investable asset minimum, we are having millennials, younger investors, walk in and say, I made more than a million off of these crypto holdings, a meme coin, Bitcoin, whatever. Huge part of my portfolio. I know I should get serious about this. I know retirement is a thing I should be thinking about. What can you do for me? And you have to have those conversations around it, which I think is important for advisors to remember. I know a lot of advisors talk about crypto and they say, like, too risky, don't want my clients to sit in it, and I totally understand it. But we're getting to the point where we have to use that language. We have to reckon with the fact that we have clients coming in who have made their wealth off of these alternative markets.
Right. They started from the other direction. They made wealth early in a speculative asset, and then they're saying, now I need to turn this into something that will generate real wealth going forward. But we also have been around, especially in the last couple of years, through the rise of the spot Bitcoin ETFs. You saw this obviously very closely at ETF.com, and we see it at Investopedia. You know what the biggest search was when spot Bitcoin ETFs were released was, what is an ETF? So people are still asking that basic question. Wait a minute, what is this wrapper? How did you see the sort of the traffic and the interest evolving at ETF.com when those were released, and since they've acquired so many assets under management?
Yeah, so spot Bitcoin dropped January 11th, 2024, and then of course we had spot Ether start trading later on in the year. I think that was in June or July, so it was around the summertime. And I would say that for us, I mean, traffic was like some of the highest days we've had just on those 2 days alone, right when that sort of news dropped. And not only are you having questions of what is an ETF, and I thought this was even kind of crazier, it was what is Bitcoin? But people are buying it. They don't know what it is. They have no clue what a spot Bitcoin ETF is, but they're in buying it because they hear that it's the next greatest thing. I think that there's there's two things that are happening in the markets right now, particularly with younger investors. One is FOMO, and so a lot of people want to invest in stuff that they hear a lot of other people investing in, even though they have no clue or concept of what it is. And then the second thing is there's a bit of, and I think someone said the word speculation up here, but there's been a lot of like speculation and gambling almost feeling in the sort of markets. I mean, keep in mind, these millennials are the ones that, and I say these, like I'm not one of them, but the meme coin, right, where folks are doing like Reddit bets and Reddit trades, and so they want to get in and they are expecting growth targets that, frankly, as we all know, are not realistic and not sustainable. But I mean, if you look at Bitcoin prices just in 2024, I mean, you would have been a winner, right? I mean, Bitcoin went up, I think it was like 149% or something like that in the year. And they're expecting that from their assets and their entire portfolio.
Right, but maybe more skeptical of the capital markets, at least that I grew up in, or more skeptical about the traditional path that would lead them to building wealth over time. And I think, again, that comes back to that word trust. But also the goals might be a little different, Callie. When you think about recent surveys, I was looking at one from Nationwide recently about younger people who say, maybe I don't need to own a home. We've put that price tag on the American dream at Investopedia at $4.4 million in today's dollars for the things that you might want: to own a home, to be able to retire, to send your kids to college. A lot of those things might not be as important to younger generations who feel like that might be out of reach, which changes the equation when it comes to maybe you don't need all that money, and it opens up some other possibilities. And what does that mean for the wealth management industry, for RIAs, but also for educating people about what wealth really means going forward, Callie?
Yeah, unfortunately, I don't think that's been an intentional choice. Housing has become incredibly unaffordable. In fact, if you take the median sales number for an American house, there's data around this. You calculate the 30-year mortgage payment as of today, it's 50% higher than 5 years ago. 50%. That is insane. And it's not like millennials and younger investors are saying, okay, can't afford a house, that sucks. I'll just go rent and, everything will be cheaper and I'm making money on the side. Doesn't work like that. Rent prices have gone up, wages haven't kept pace. We're seeing a little bit of progress there. Younger investors are in a shitty situation. Pardon my French. It's really disappointing to see, and I think that requires you as an advisor, working and serving younger investors to, first of all, have some empathy, understand that a lot of your younger investors are in a weird spot. They have parents who, grew their net worth on the back of their houses, and that's just not an option anymore for most younger investors. So you have to be willing to, think a little bit bigger there. You have to be willing to coach them through the psychological side of home ownership and, what you're giving up, but also what you can get. What other goals you can focus on more because you're not, gunning toward a home. But I have a lot of empathy here. The numbers show the unfortunate situation that we're in, and it's something that we hear from clients over and over again. I can't buy a house, and, I feel like my stability is gone.
The traditional building blocks, the foundations of wealth have been the house, real estate. Either that was given to you by your parents, you bought it, you made that investment, you've seen the value of that grow, you've seen your portfolio, if you've been invested, grow as well. But if the belief starts to wane in those two major assets as a path to generating wealth, what does that open up, and what does that mean in terms of how we need to rethink how we help people actually build generational wealth, Callie?
Well, I think this, first of all, I think crypto actually fits into this here. I mean, Caleb, you were talking about how younger investors don't trust traditional financial markets. Duh, obviously. I mean, have we looked at the past decade plus? The global financial crisis, the COVID pandemic, a Wall Street that's increasingly out of tune with the younger investor, our industry attitude around things like crypto that has made investing more accessible. Like, look, I'll be the first to admit crypto is a riskier asset, but I also think more accessible markets is better for any market participant. It's better for the industry as a whole. So a lot of things have changed. We have a lot of scars here. We have a lot of weird feelings when it comes to risk tolerance. And again, I think advisors need to acknowledge that. And I also think that there's an access component of this as well. I mean, I don't know how many advisors I'm talking to, but I'm willing to bet a lot of you have a minimum AUM at your firm. Of course you do. You want to make your practice worth it, right? Like I said, at Ritholtz, we have a service tier for everybody. If you have $200 in your pocket, you can come to us, and we have a robo-advisor and light financial planning that we can put you in. I'm not saying you have to start a robo-advisor, but now is the time to appeal yourself to younger investors. Throw out some lighter financial planning options. Go fee-only versus AUM-based. I know these are tough decisions, but to serve younger investors, you truly need to be able to talk to them and understand, the psychological challenges that we're going through, and the mindset of building wealth that we have.
Kristen, you mentioned a couple of powerful forces. There's FOMO, right? Mm-hmm. There's also YOLO, right? And then there's the experience economy. Nobody has better stamps in their passport than you. You really take advantage of the fact that you want to experience things. You travel.
Yeah.
And I think that a lot of younger people are like, you know what? If I'm not tied down to what everybody told me I needed to do, save money to buy a house and maybe even afford college or deal with it, what does that open up in terms of the experience economy and in terms of the way people want to live their lives as they get older and grow into parenthood and such?
Yeah, so I think what we're now touching on is really kind of like the title of this conversation, right? Which is how we are redefining money and really redefining wealth. And I think it's going to be incumbent on any advisor when they have conversations with any sort of younger investor is to really ask them what wealth means to them, because it is not the same as what wealth meant to their parents, right? Because gone are those sort of building blocks to wealth that we're talking about, that we're so used to our parents and our grandparents being able to have. So you ask yourself, if you are someone who's younger and you go, okay, I can't afford the house. All right, so that's out. And the house is obviously the way that we've told people that they can catapult themselves into a higher socioeconomic class. So that's gone. Okay, and now we had COVID, so now you don't have to work in your office. So you're not now tied to a certain location. It opens up a lot of different possibilities. And when you have things like cryptocurrency helping you boost your investment portfolio by quite a bit, you start asking yourself, okay, well, what does wealth actually mean to me? And I think what it means to a lot of younger people is freedom, right? And we've all known that really wealth is actually freedom, but I think that they're truly experiencing that freedom in terms of traveling. I mean, the FIRE movement, I don't think the FIRE movement could have caught on 30 years ago, right? I think that it is particularly built, that sort of movement, for a generation that says, maybe I'll never have the house, maybe I'll never retire. I've even heard of the reverse retirement movement. I'm not sure if this is something that you guys have heard of, which is you say, screw it, I'm just gonna not work now and I'll work when I'm 70, and that's fine because I'm going to be working till I die anyway. So I might as well enjoy my life now while I still can, and my knees are still working, and my Achilles tendon is still intact, although someone here was in a boot, so I mean, I know it's kind of hairy for us if you're in your 30s. And they say, you know what, I'm gonna go enjoy life now. I wanna be able to go to Paris, I wanna be able to go to Hong Kong, and I kind of wanna travel through Mexico, and I'm gonna live in a van, and it doesn't matter to me. I'm going to kind of reclaim my time and enjoy those kinds of experiences that I have.
Yeah, but even that requires planning, which is a role that the advisory services can provide these days. There's a couple of big mega trends that you hit on there too, which is we're living longer, right? Mm-hmm. Social Security, the safety nets may or may not be there. This great wealth transfer that I think I've been talking about in financial media for the last 10 years, kind of still waiting for it. Why? Because people are getting older and they need their money to last longer, Callie. So you have those two forces at play, plus the fact that things just get more and more expensive. That makes us have to sort of enter the variables in the equation about how much you need. What's that number? Mm-hmm. And the best financial planners help you do it backwards. They say, how much does it cost to be the you want to be? And you work backwards from that. So help us illustrate that challenge from a planning perspective when it's like all those trends that we're waiting for, they're going to take a lot longer to play out and the numbers look different.
Yeah, so we see it from both sides. First of all, so I come from a brokerage background. Ritholtz is actually the first independent RIA I've worked for. I worked at LPL, didn't have as much contact with advisors, but of course was providing research for them. I say this because I'm privy to a lot of conversations that advisors have with clients about every aspect of their financial plan. The portfolios, of course, investing, of course, but also on the planning side, when to pass on wealth, trust and estate planning, tax planning, that's a big deal. So, Caleb, I see it from both sides. I see younger investors coming in saying, I want to find out how to get to these like nebulous goals that Kristen was talking about, or I made a bunch of money at a tech company. I'm coming in with a lot of equity comp. Help me. I feel like I should be doing something with this, or crypto holdings. And then we also see it from older clients who say, I'm 70 years old. I have $10 million. I don't feel like I have the reflex or the training to be able to spend my money. And where millennials and younger investors come in is they have kids. And we have to have the conversation around, what are you waiting for? Houses are unaffordable. Your kids are having kids. Maybe it's time to pass on some of that wealth now. Maybe we could be more strategic about it. So it's really interesting how the great wealth transfer and how the changing dynamics in our society work through investors of all generations. But one more thing I'll say about that is that, I think you have to be very thoughtful around how you portray what's going on today. Affordability, for example, we all talk about prices. Prices are going up. Prices actually go up the majority of the time. You don't want them to go down. That's when you're in trouble in the economy. But affordability, functionally, is how much you're getting paid and how much prices are going up. There are, two sides of the equation here. So advisors have a lot to work with. There's a lot of income-based planning and a lot of career-based planning that you could step in and help younger advisors with, younger investors.
Yeah, 100%. You touched on this as well, Kristen, and it's been coming up a lot, which is wealth. What does the word actually mean? Mm-hmm. When I speak to young people, students, either teenagers in high school or even college students, the first thing I ask is, would you rather be rich or be wealthy? And the answer is always different and it's always unique, and their definitions are unique because a lot of, especially younger people, my kids are 18 and 20, they're heavily influenced. They see rich wherever they go on their phone, but they don't really see wealth and understand how we generate that. So how do we teach that differentiation between the rich that you see, which is the drip, the whip, right, and the wealth, which is having your money really make money?
Yeah, and so this is something that I think is a part of that education piece that has to go on, because again, as you're mentioning, you've got I guess now, was that Gen Z and even Gen Alpha, actually, Gen Alpha. Right? Yeah. So they're growing up in a world where, they have access and they kind of can get the sort of behind the scenes view on a lot of people's lives, or rather what those people want to portray and want them to see. And so there's a lot of people that think, they have to have, he called it the whip and the drip, but it's true. They have to be able to have the nicest clothes. I mean, you hear in dating, girls are expecting guys to buy them bags. if they like them. Like that's like a part of like the sort of environment that we're in right now. And even for millennials, I think millennials have a better sense of, you know, the difference between rich and wealth, and they're redefining what that wealth means. But they still do want access to these parts of the American dream that have been sold to them. I think that needs to be super clear. Even though we are seeing this sort of redefinition that is happening, I still don't hear anything changing from, you know, what my parents told me that they wanted from their lives, from what my friends are telling me they want from their lives. Like, they still do want to have a family, they want to have kids, they do still want to be able to actually go and buy a house and have a decent car and be able to take a couple of trips a year. That is still something, and they are still investing and kind of, I think, hoping that that reality can kind of turn out for them. And let's be clear, they're not all like broke. I don't mean to say that.
It's easy to overgeneralize this massive generation.
Right. They're not broke, actually. It's just, Callie was mentioning that kind of affordability piece, which is so key here. They have money, right? They just can't access all parts of the dream that sort of has been sold to them. And I think that we're now seeing even the difference between the Gen Z and the Gen Alpha and millennials and how they sort of approach wealth, the way they approach work. I mean, we're seeing a kind of radical shift with, I think, some of the younger generations because they have more access to money, and they also haven't been hit with the kind of economic crises that millennials have. I think millennials are holding on to a bit of like economic PTSD, and that it's driving some of the decisions that they're making, and we're not seeing that with some of the younger generations. I think they think that wealth and even riches are more obtainable than what we're seeing from the millennial generation.
Because they may see it more often, right?
Exactly.
Yeah, and can I add something there?
Please.
So my role with Good Advice and Liftoff are two service tiers again that are, you know, robo-advisors, and then our models with light planning. You know, I have to think about the content and the marketing around it, right? And when you think about marketing, you're thinking about little action points, you know, how to get your clients to think about certain points in their planning journey, but also understanding why clients would come to you and ask you for help and what they're asking about. You know, I want to echo what Kristen said about how wealth is changing, but there's still, you know, there still is that traditional path that a lot of younger investors want. A lot of conversations we have with younger investors are around life events. We market around life events. You know, just because you're a younger investor and you have access to so much of the world doesn't mean that you don't want a family, you don't eventually want to buy a house, you know, you don't want to take those pretty traditional steps. So that's still a very prominent part of the conversation, even though wealth does look different.
No doubt, and that's why you've seen so many RIAs in the industry and a lot of the industry pivot to this holistic planning, right? The asset allocation, thank you ETFs, is good, right? We'll put you in a diversified portfolio, we'll put you in growth. There's all different ways to slice that, but it's the life event planning. You don't need an advisor or a planner until you need one, until life gets complicated. But the investing part, Kristen, as you mentioned at the top, that's become a lot simpler because we can look at these ETFs, we can look at products and say, I get what that is now.
Yeah, and I think, as I was kind of mentioning, right, like the reverse retirement and stuff, that doesn't mean that they're not investing and wanting their money to grow. They just don't think that they're going to be able to, you know, like buy a house, leverage it, but they still want their money to kind of go to work, but they don't know exactly how to make it work and where to place it to make it work. And that's why I think this kind of is so important for advisors to kind of understand the generations that they're dealing with and being able to have that conversation with them, to talk to them about their portfolio and to make those sort of smart decisions, especially when, again, we are literally right now at a point where putting all of your money in tech probably isn't going to help you in 2025. It might not help you in 2026. And you actually need to have someone that you can talk to about, as you're mentioning, that holistic planning and saying, these are actually my goals. These are the things that I want in my life. I don't think that millennials are necessarily thinking about it in the sense of, I want $5 million. They are thinking about it in terms of these life events that Callie is talking about, that these are the things that they want to be able to do. And they're looking to you guys to say, okay, how can I achieve that given this sort of economic backdrop or the backdrop of economic difficulties that I currently have?
Great, which sets us up for the next real challenge, which is, Callie, how do we teach time, consistency, patience to show that it works? It's just the patience when many younger people live through their phone. It's so immediate. Everything they want, need, spend, transact with happens right here, when investing is a marathon.
Well, obviously, you just say stay invested and you throw some numbers at them. It's pretty easy. I'm just kidding. I'm kidding.
And great charts, right?
And some great charts. I was totally kidding. This is a very tough conversation to have because, as Caleb said, our attention spans are, as long as a goldfish is right now. We have social media tugging at us for attention. We have markets moving faster than ever. There's piles of data that show us that. And in all of this, we have younger investors trying to go for those life events that are years and decades down the road. So my approach, and I think some of this is going to be obvious, my approach is, of course, speaking their language, getting down on their levels, appearing where they're looking for this information and this advice. Of course, Ritholtz does it really well. I mentioned we have the compound. About 30% of our audience is investors under 34. We're on YouTube, we're on Instagram, we're on TikTok. We have newsletters. We're getting to where people are pulling out their information. But I also think that there's a squishy element of this conversation, and I know advisors would agree with me because, not everything can be quantified in black and white. But there's a lot of, building that trust with younger investors and saying, hey, I know your situation is a little bit different. I know the noise is very loud outside of these walls. Look, we have a process, we have an investing philosophy. You can lean on us and I can teach you how it works, but you gotta give me some trust here. You have to be able to understand, where I'm coming from here and how I can help you focus on the right things.
You write a tremendous Substack, great newsletter, and you recently wrote about the power of narratives. And I think this applies to all of us, either in financial media, financial services, or serving the investing audience out there. But the power of narratives is extremely strong right now, especially given all the different ways it's delivered to us, whether it's on our phone, through the compound, watching YouTube, watching CNBC. How critical is that, and how do we sort of harness that to make sure we're teaching the right things?
Well, I think you first have to realize that, markets do move on narratives. Markets are a reflection of future expectations, and sometimes those future expectations are based on headlines that come out or comments that are made. And, every type of investor and market participant is grappling with this right now and how to sort noise from signal when there's very little signal. The way that I approach it is I lean on the data. That's the nerd in me. That's the analyst in me. I apply some empathy to what's going on. What headlines really, touch the feelings of people I'm talking to. Like, really great example. A lot of strategists will come out and say, ignore what's going on in DC. And of course I believe that to a point, right? There's a lot of nuance there. Of course I believe that, but I'm not, when I'm communicating to younger investors, I'm not going out there and saying, ignore what's going on in DC. It's so easy. It's not easy. It's really not easy. So I really like bringing the empathy chip to the conversation and, parts of history and saying, investing, of course, is based on numbers and historical data, but it's also, based on feelings right here. And I want to appeal to your feelings while I want to teach you as well, what's going on. That builds trust. That makes the situation more real to investors. And ultimately, that's the combo you need to appeal to younger investors as advisors.
And then there's the authenticity part, because we're all content creators too, talking to this audience. But we just came off a panel right before us about how to do social media to help grow your business. But authenticity is super key. Now, we're not suggesting that when you say get on their level and be where they are, you're not wearing a silly hat and doing TikTok dances necessarily. Neither
You
of
can.
you. You totally can. But being authentic, being who you are, super important, especially as you're putting the message out there, right, Kristen?
Yeah, so a lot of investors, when they say that they're looking for an advisor, have a couple of things that they're kind of looking for. And one of them is, do I want to hang out with this person, right? And I think authenticity really kind of is a key part of that. If I feel like when I'm looking at you or I'm hearing you speak, or if someone sees you on social media and they think that you're either lying or you don't care about their circumstance, or you're a bit robotic, or you're doing something for the sake of something else and not actually because you're trying to talk to them and give them a message, then they're going to shun away from you. So I don't know how many of you follow Caleb on Instagram, and if you're not, you should, but he loves to skateboard. I'm surprised, I know that he can't skateboard up and down this beach, but he loves to skateboard. And in his Instagram videos, he will literally talk to you about the markets while riding a you have a longboard, right?
Longboard.
There we go.
Longboard
So
only.
he skateboards down New York City, nearly getting hit by cars and cabs through buildings, and he'll literally talk to you about finance, right? And that is a part of his personality, and there's a piece of authenticity to that. Now, if I started to do that, because I think that that works for Caleb, everyone would think it's ridiculous, because I don't know how to skateboard, and I don't care to. So I think
Lessons
you have
available.
you really have to bring yourself as a part of that holistic planning. You have to open yourself up, and you don't have to give everyone your private life, but you do have to create a touch point with the people that you are working with and with those younger investors, that they feel that they can trust you and actually have a conversation with you about something that is so incredibly intimate and personal to them, which is their money and their ability to achieve these dreams, hopes, and aspirations that they have for themselves.
Right. And very quickly, too. We want to give them the message right away so that they're like, that person I trust, that service I trust. I think that's still going to be the most important word in this industry for the next 100 years. But let's talk a little bit, Callie, about the Burger Kinganization of financial services. Have it your way. And I think there's a reason for that, right? We all want different things, and this entire industry, every 10 out here, is offering some customizable solution to help you solve the puzzle. And what investors, especially younger investors, know is there's a lot of choice out there, so one size doesn't fit all. There's the customization, there's the ETFing of it all, but there's also a lot of different ways to solve the puzzle. And how are you helping folks think through that at Ritholtz through what you do? But in general, how can this industry do that a little bit better job of that? Besides the marketing that goes on, a lot of this I see, but I see it on the Golf Channel.
Yes. So I'll start with telling you how we do it at Ritholtz. And like I said, many service tiers, we serve many investors. In our traditional planning model, usually that customization comes with the planning. We have a custom indexing tool, it's called Canvas. And yes, if somebody comes in with a concentrated portfolio because they hit it big on NVIDIA's equity comp or something, we can use Canvas to customize a portfolio for them. But generally, we have an investing philosophy, we have a process, we stick to that process. We don't get too cute in the portfolios. Planning, however, is a different story, and that's where our superhero advisors come in. They have those conversations around your why, what is wealth to you, where do you sit, what do you expect going forward, what are the life events you're, shooting for, and that's the holistic approach that we take there. And I think customization is hard, right? Because we would all agree that you can't, come out with an offering and say take it or leave it, but also you can't go the other way and say, we're going to customize every single part of our practice for every single client. I mean, that's just impossible. So I think you have to find that happy medium, but be intentional about where it happens, because we all know that running a practice is much more complicated than it sounds, and there are very hard parts of it to consider as well. So I think you have to be intentional, draw a strategy around that, really step into your niche with where you're offering customization, and really just be honest with yourself on what you can do there.
Right. Let's get a little bit deeper into the ETF industry, which you know well, Chris, in which we know the big just keep getting bigger, right? Just like in the stock market, giants attract more and more capital. The herd follows the herd. Yet there's more and more product coming out. I think there's going to, there's projections that the ETF industry will double in size in the next 5 to 10 years. I don't know where that's coming from, but maybe these young investors. But as issuers come out with new products and they try to get new messaging out there, how do they need to craft that to get people's attention when everybody just basically does the same thing?
Yeah, so you're right. I think I'm writing about a launch, like multiple launches almost every single day. And so we are seeing thousands of ETFs. And of course, we're seeing the inflows. I mean, 2024, we had a record year, over $1 trillion of inflows into the ETF space. And there's obviously a lot of reasons that people like ETFs, right? There's liquidity, there's transparency, there's tax efficiency. And for the retail investor or someone who is trying to start investing, it's easier. And it can sometimes be cheaper than just going out and trying to stock pick, right? Why should you stock pick when someone else can essentially do it for you in this nice and easy wrapper? But when it comes to sort of marketing some of those ETFs, and I have these conversations with issuers, I'm always asking, why should I buy your fund instead of, right? If you give me an S&P 500 fund, I'm like, why should I buy that instead of VOO? Right? Why should I buy that instead of SPY? So you have to ask yourself, right, what is the product that you're actually offering, and how is it going to be different or innovative? And there's so much room for innovation in the space of ETFs. I mean, at Future Proof, I was talking to Ed Rosenberg, from Texas Capital, and he was talking to me about the money market ETF that they were about to launch, which it did launch, MMKT. And that's new. and that's novel. And there's going to be an investor out there that can see that and need that in their portfolio. I mean, we had the spot Bitcoin, the spot Ether ETFs that launched, right? And then someone, I can't remember who the issuer is, but like BTGD is Bitcoin and gold inside of the same wrapper. Now you can ask yourself, like, do I need Bitcoin and gold in the same wrapper? But that's not the point. The point
Why
is,
not?
right. Well, I mean, if you think, we're not going to go into that, but you ask yourself, what is going to be different about your fund? What is the innovation of your fund? And if you're able to coherently explain it to me or to just anyone, hey, this is why I think this fund is super interesting and will help you in sort of your investment goals, then you're going to have a fund that people are going to want to invest in.
Yeah, and on the back of that, because I can't get over this Golf Channel comment, like that
I'm sorry.
tore me up. But it's true.
True.
You have to be really smart about how you market funds, your practice, anything that you're offering to the younger investor. This is the most obvious point that I'm going to throw out there, and it's also the hardest point that you have to reckon with. But you need to be able to coherently tell the story around what you're putting out there and why the younger investor should come and use it. And it doesn't look like what it looked like 10 years ago when I started in this industry, even 10 years ago. It's not, this fund has performed, this well over the past X years. This fund provides you Bitcoin and gold in a wrapper, because younger investors are going to say, cool, well, what's in it for me? Why?
Right.
Why would I do this? Okay, maybe I would do this because, a friend of mine is investing in it, but, why, how does my money fit here when I have all these choices in front of me?
I think you also have to be clear on that, and honest, that not all things are for everyone. And I see sometimes people make that mistake and they try to pretend like, oh yes, this actually works for every single generation, which is not true, right? Every generation is at a different point in their own sort of financial journey, and different things are going to fit into that financial journey. Like, no advisor is probably telling someone who's 25 coming to them, like, you need to put all your money in fixed income. Because that would not make sense, right, for them on their financial journey. And so you have to kind of make sure that you're also being clear on who actually is appropriate for this product that you've created, and then again have that conversation. Again, I think, as Callie is saying, like, be able to coherently tell that story. If all you can rattle off is a lot of jargon and numbers from a prospectus, you are going to lose people every single time.
Now, let's wrap it up on this small question, but loaded question, which is back to the trust issue. If we go through another financial crisis or a situation where the market gets cut in half or down 25, 30%, a prolonged recession, then I think this narrative of, no, these things come back. This thing works itself out. You need to be patient. You need to give this time. Keep doing the thing. What if that narrative starts to crack more this time, Callie, because just things feel a little bit more different? And I know we say that every time, and I've been through a few of these, but what if we lose that? How do we get it back?
Yeah, that is such a loaded question. I mean, I got to start with, this is one of the most empathetic conversations you're going to have with clients if we hit another crisis. Generally the approach I take and the approach Ritholtz takes is to be more proactive around these conversations, to come armed with talking points, to come armed with empathetic points, understanding how you can meet the investor or the client where they are, and then of course being armed with data and research and all that fun wonky stuff. But I fear that the industry doesn't value empathy enough here. And I'm talking to some empathetic people, but overall, from what I see outside of these walls, outside of this beach, there's a lot of stay invested, we've been here before type talk going on. That's not wrong, but you have to be very careful about how you say it. And from an advisor perspective, you have to be very intentional about being prepared for those conversations, teaching, balancing the we don't know what happens next with, let's be a little more active here, let's be a little more tactical here if we can. Understanding that a lot of investors, just want control, or they want something a little more nebulous in a situation that isn't so quantitative, and being able to appeal to that. I threw a lot of stuff at you, but I think empathy really is the key here.
Right. Final message, Kristen, to the advisory community, but also to the issuer and the resource in the education space. What do we need to do?
Oh, for next steps, I guess, considering, yeah. So, I mean, I think, again, education is so key, and kind of that's what Callie is really also talking about, right? It is education with an empathetic bent. We're talking specifically about younger generations right now, and so when it comes to times of economic crisis, I think it's a two kind of pronged approach. One, reminding them or really confronting and early on ways in which that they will be okay, right? That's ultimately what they want. They want to know that they're going to be okay, and making sure they fully understand all the steps A through Z, that you are helping them ensure that they are going to be okay. And then the second thing is that there's opportunity. Millionaires are made in economic crises. And if you are young and you can get them excited about that, not that we want them excited about the world burning, but you can get them excited about, hey, this is what I can see coming for you on the other side of this, right? I am unbiased and I am approaching your finances without emotion, but I want to make sure that you know that I can see the future for you, and this is what's coming up ahead, even though you might be a little bit nervous and anxious about it.
I feel better just having spoken to you two about it. Thank you so much. Two great educators, two great communicators, two of my favorite people in the industry, Kristen Myers and Callie Cox. Thank you, Future Proof.